Hi everyone, my name is Mohammed Ali and my student ID is URE8016, and today I'm presenting my presentation for the corporate accounting, having the student subject code is HI5020. So today the topic of our presentation is accounting for income tax for the Black Cat Syndicate, and my company name is Black Cat Syndicate. Black Cat Syndicate Limited is operating in the mines and minerals industry, has been selected for the current report with the help of data extracted from financial statement of the last 2 years. And the Australian Stock Exchange, I have selected the company Black Cat Syndicate, and I'm presenting the 2 years data of the income tax for this company. Here's the introduction of this company is to conduct the report on the company Black Cat Syndicate Limited. Company has been selected. This company is listed on the Australian Stock Exchange recently in January 2018, and this company is operating in the mines and minerals industry of Australia and is located in Calgary, Western Australia. Financial statements reveal that the selected company has incurred losses in the last few years. That's why, although the performance of the company is satisfactory, and the reason of the losses is due to the nature of the business, because the nature of the business requires the new equipments for the mining, and the natural disasters may affect on the performance of the company and its efficiency as well. The important concepts of this company are, as we related to the income tax, the main points will be accounting profit, taxable profit, temporary differences, deductible temporary differences, taxable temporary differences, deferred tax assets, and deferred tax liabilities. So the first one is the accounting profit. The accounting profit is referred to as the total income of the company calculated by applying the GAAP, which is generally related to the general applicable principles. In other words, after deducting the expenses from the revenue, the resulting figure in the accounting profit is the company, and the taxable profit is the profit that we have after paying the tax. It's our taxable profit, and the temporary differences will be at the times temporary occurs in the cost of the assets recorded the books of the accounts of the tax base of that asset. The deductible temporary differences will be if the difference that likely to result in yielding amounts at the time of determination of the taxable profit or loss is referred to as temporary difference. Taxable temporary difference, in that case where taxable amounts will yield in the future for the asset at the time of determination of taxable profit and loss. Whereas the deferred tax asset will be the financial statements that are prepared with the guidelines provided in the International Financial Report System. As far as the treatment deferred tax asset is concerned, in the International Accounting System provided clear instructions for that in regarding recognition of this item. Companies recognize deferred tax assets in the time of losses. So this company is basically doesn't pay any tax because of its losses, doesn't make any profit. That's why it hasn't any profit, so it doesn't pay any tax. Deferred tax liability is a provision in international accounting standards regarding recognition of deferred tax liability, that all deferred tax liabilities can be recognized against all available temporary tax differences, whether deductible or taxable. But there are a few exemptions in that rule. So the tax expense of Black Cat Syndicate Limited will be, the year ended in 2019, tax expenses was nil. So there was no tax expenses because the company was all in the loss, and there was loss of around billions during that year in 2019, highlighted in note 7. So the rate of tax. So determining the rate of tax for that company will be not applicable due to the situation, as there is no tax conclusions for that made in the profit and loss statement due to loss occurred. And in other words, the company has not paid taxes in the year 2019 due to loss in the business. Deferred tax asset and liability. The net deferred tax asset for the year 2019 is 7,68,061, and the year 2018 was 3,80,649. During 2018 and 2019, the company paid extra taxes that resulted in the deferred tax asset in both years. So the current tax, income tax and payable. So we are calculating the tax for this company, and the company is in the loss, so they didn't pay any tax, and they are applying for the exemption for the tax. Due to the continuous losses in the past years, the company was not liable to pay income tax, as the income tax is paid on profits made, but in case of this company there are no profits recorded in the last few years. The company was entitled to tax benefits on the number of losses incurred in both years. So the income tax expenses in the profit and loss and cash flow statements. As in the profit and loss statement and the cash flow statement is not applicable for the company because there is no income tax payable outstanding, neither the company has paid in the current year because of its losses, and it faced billions of losses, that's why. So the Black Cat Syndicate Limited has failed to generate profits in both years, 2018 and 2019, mentioned in the financial statements. Whenever a company incurs losses, according to the international financial system and the GAAP principles, a company claims income tax benefits. So the GAAP principles is the general acceptable accounting principles. The income tax benefit is considered as relief for the company, not treated as expense. So based on these income tax expenses for the year 2018 and 2019 is considered as zero. So temporary and permanent differences. So the temporary difference in the tax expense is due to the change in both tax and accounting rules, and the permanent differences in the tax expense will be irreversible tax difference occurs between tax expense and the tax to be paid in the current tax year is referred to as permanent difference. So moving next towards the next slide is comment on the treatment of tax. After evaluating financial statement, especially for both profit and loss statement, it was interesting that the company was incurred losses consecutively in the past few years as mentioned in 2018 and 2019. So it was a bit confusing in the start of the answer question, like tax expense in the current year. As mentioned earlier, the company has incurred losses, as we mentioned earlier, in both 2018 and 2019. So moving towards the conclusion will be, it has been revealed from the profit and loss statement that the company has incurred losses in the last 2 years. So due to the continuous losses in the last years, the company has not paid any amount as tax expense, instead claiming tax relief from the government from taxation authorities. So today the presentation was on the Black Cat Syndicate company, which is based in Western Australia, and the company hasn't paid any tax but is like a demand for the exemption on the tax from the tax authorities. So the profit and loss statement will be zero in that case. Thanks so much.